Welcome, everyone. We have Chris Hallows here with Benchmark Mortgage, and I'm joined by Amanda Maesis with Realty One Mountain Desert.
Hello.
Thanks for joining me today, Amanda.
You finally got me on this.
Yes. Oh, this is the first time we've done a podcast. Plus, well, it's a podcast style, but we're doing these educational series specific to, we have so many different groups that we've been working to connect with and do live seminars with in the last couple months. And this is then the recorded version for all of those then joining us digitally here. And so if you want to go ahead and share the slide, we got Van, our producer, over there helping us out there. So today in the seminar series is understanding markets. And that's where, so myself and Amanda then are going to be your hosts today. And as a reminder, this is all about our House Happy campaign, is basically saying that Amanda and I believe that everyone in Flagstaff or Northern Arizona deserves to have a safe place they can call their own that meets their space needs, fits financially, and positions them for their best. I'm kind of shifting the verbs on their best family and future. And so that being said, one of the things that people don't understand oftentimes when it is, whether it is, we're going to focus more on the buying side of things today, but this is true for the rental market as well, is they don't understand markets. And the Flagstaff supply and demand, how mortgage interest rates shift. And then also, now here we are recording this here in spring of 2026. So full disclaimer, a lot of these principles are universal, but as to the exact market, we do want to give you context to now.
Yes.
Though if you're watching it 6 months from now or a year from now,
it might look a little different.
Call us, things will have changed. But we'll give a little bit of forecasting here with that. I mean, if we talk about then an economy, right? And that's what we understand, like a simple economy, like so, go with me on my slides for a little bit here. As we talk about markets, we need to understand then what it makes an economy. And, when it was back to just an island of, hey, you are good at fish, I can say this, fishing. And I am good at climbing trees and getting coconuts. Let's trade some coconuts for some fish, right? That simple. And obviously our economy right now has gotten like so complex, right? Increasingly complex with it. And so we as a buyer are conditioned, and I want to talk about this then, simple story that you'd heard me share this before in the live seminar, that my wife and I, we were on the Target registry, and when we got married, and we just actually had our 17-year anniversary.
Wow, that's congratulations.
Crazy. And so 17 years ago, this 32-inch TV, which is hilarious, that this was $430. And with our Target registry, I was like, honey, we got enough toasters given to us. We got enough crock pots. Let's get the TV. Yeah. So I was so excited to spend our money on this TV. And really, what I thought was interesting, like our buyer and our consumer behaviors now are such that, I did this little Amazon search. You can see within just seconds, I'm seeing multiple. These are, this has actually gotten cheaper.
Oh yeah.
And thinner. Like this thing's a brick. And we have multiple options to choose from. Yeah. Right. We're used to that. Right. Or even, I thought this was hilarious, is we're sold on the deals. There's always a sale, even though you can see,
everybody wants that sale.
If you look at this closely, everyone, you can see that it is marked the same price as the original, but you want this yellow price tag that says sale. You want to feel good. Right? Even though it's the same price.
I literally just bought something from Bath & Body Works last night that I wasn't even looking for because it was on sale. Okay. I will honestly say it said that it was $94 and it was on sale for $35 last night. And I said, well, you know what? It's a sale item. Why don't I get this?
Yeah.
So I 100% see how people do this on the daily because I felt I needed another candle.
Yeah. Or likewise, it's when we've all been on those different sites. Like we were buying blinds recently and we were on that, and it's like, but they got the 20% off. So it's like, no, they always have. Like they always project to sell. There's always something happening because they know you. Oh, yeah. Not everyone's buying blinds regularly. So when they by chance jump on and they see a sale, it's like, no, you can, like when I was doing a Google search, it's like, no, you should be not paying full price for those because they are always on sale. Yeah. So that's what we get, we get used to on the majority of our buying. And you have these situations. So I was explaining, if you don't know about this store called Last Chance, this is a place down in like Tempe, North Phoenix area. Basically it's this store that gets all the Nordstrom Rack and like Ross Dress, like they get all the things that are just not sold and all those other discount arenas. And this thing, as you can see, it's kind of like a Black Friday, like pretty much every day. Have you been?
I haven't been there, but Jenny goes quite often.
Okay, so Jenny's all about it. My wife is all about it too. I am not all about it. See, I don't like these types of things because in this market, the key part here is there's scarcity.
Yeah.
Meaning there is not 10 different pairs of Birkenstocks that my wife wants to find the $25 pair of Birkenstock sandals. There's maybe like one, and you have multiple people that want that one. And so when we start talking about the real estate market, that's one key piece that starts to say, okay, supply and demand. And that's what kind of segues us into, and I thought hopefully a fun introduction for people to realize, okay, this is different. I just need to kind of switch my brain. And because again, I look at this picture here on the screen and I'm not about it. And that's where a lot of people feel like real estate market, I'm not about it, but it's, if you want to own a home, you're going to have to figure this out. So let's talk about it. So give us then your realtor kind of, let's call it 7,000 feet perspective of Flagstaff real estate market. What creates the dynamic of the market that we're in?
So for us, I didn't realize how much landlocked we really were. I mean, I knew that we were a landlocked town, but seeing that we were 97% was a little crazy for me to see. But then you start realizing and looking around town that we don't have many places to build, and we also can't really build up either. So, we have we're a college town. So we're always, as long as we have a college in this town, we're always going to have that type of buyer. The investor property, we have a lot of second home homeowners that come here, but we also have a lot of people that are migrating here and getting to work from home and, getting to relocate for whatever purpose they want now that they can work online. So we have a lot of different types of buyers in Flagstaff. That bring a lot of people. We get a lot of Californians, a lot of Phoenicians getting out of the heat right now.
Yep.
Right now, especially now that it's over 100 degrees, 110 degrees, I think today it was, or 105. Oh my gosh, they're coming up here. And I mean, I literally just had 3 showings at one of my houses today from all Phoenix people. So, so we have a lot of different types of buyers that come here that keep our market live and thriving always.
You hit on 2 major points there really quickly in the sense of with the landlocked aspect, meaning the federal land, primarily federal land that surrounds Flagstaff is not easy to convert. Sure, could things change in the next 50 years, 100 years from now? Yeah, but that's not the type of land that is very difficult to be converted, which is primarily what surrounds Flagstaff. So we can't just build. Like a lot of other areas. So again, this is unique. Other areas, like in the Phoenix Metro or different things where they can just continue to build massive communities and they have multiple builders building competing communities. That's a different, supply aspect there, whereas we just don't have that. And then you touched on the multiple, we have some examples here on the screen, the multiple different demographics that build out a very robust demand sector in Flagstaff. Right. And we work with, having been here in the Flagstaff market for over 17 years, that we do see just a variety of different buyers and buyer intentions. I mean, it's and so that's with supply, growing at a very slow pace and demand growing at a pretty strong pace, as we continue. And this is maybe more anecdotal than anything. I actually should have looked it up before we got. So everyone pause this and jump onto your favorite search engine and look, where does Arizona rank in state population growths? And at least for the last decade, we've been very, very high on that list of top growths. So like you said, a lot of people wanting to come in for the lifestyle, corporations moving into, the Phoenix metro, and, they don't have hurricanes or massive ice storms or, they have big AC bills, but, they don't have a lot of these other issues that some of these other locations can have, relatively affordable there. And then we all of a sudden become their destination, their vacation. Right. So for so many different demand sectors, it just creates a unique market. I think that's a very, very, the first thing was understanding markets. The second thing is the understanding that Flagstaff is then unique. And you can't then go comparing to, we can't compare to the Phoenix market, or we can't compare to Colorado or to Utah or to Florida or all these different areas and locations, because they're each going to be unique.
Yes. And I would say we're also we're pretty big on a lifestyle market too. Yep. We get we're Four Seasons. We are just hours away from, lakes and the Grand Canyon. And people they come up here for a lifestyle. So that's really huge with what we have for our market too.
Definitely. And so that being said, we thought it'd be helpful to go through kind of where we've been so that we can then talk through where we're going as then a Flagstaff market. And some of these are larger economic situations here. But when we look at then talking about Flagstaff supply and demand, let's talk through the 2008. So we call that the measured growth softer crash. And then here in Flagstaff, 2010, 2019, pressure builds beneath the surface. 2020 through 2022, acceleration event. 2022 to 2024 is reset without release. And then 25 to present is what we'll talk through as the time frames. So let's kind of go through those. So when we see that, so I'm sure everyone heard me say softer crash, like what? And so, yeah, we really didn't see, we didn't have that severe overbuilding issue. Were there foreclosures in Flagstaff? Sure. Did the market slow down in Flagstaff? Yes. I entered the Flagstaff market in 2008. So as far as like my personal, experience with it is people were buying. Yeah. I didn't know the boom market before then.
Sure.
But yeah.
It was just at a slower, like you said, a slower pace.
Yep. Yeah. Exactly. So certainly felt it. Now, one thing that I want to make sure to note, and this is a very interesting comparison. We talked about, I love the statistic that days on market, again, pause everyone, Google this. What does days on, months of inventory, months of inventory. What does that mean? And essentially it's a statistic that shows the number of homes that are on the market based on the pace of market. How long would it take to sell out of those homes, right?
Yep.
So when we are in the historic kind of metric on that is that if we have 4 to 5, I think they say 6 months, but I'm going to call it 4 to 5 months.
4 to 5 is what we go by too.
Yeah, 4 to 5 months is a balanced market. Balanced meaning buyer and seller are going to pretty neutral ground, right? If I'm saying this wrong. Whereas if we go above that, we have a buyer's market. If we go below that, we have a seller's market, right? If there's not enough homes to sell, then and more buyers that want them, and they're selling out that fast, we're going to see prices probably go up and buyers be more aggressive. Versus we're going to see, if we see over 5 to 6 plus, then we start to see price reductions. Buyers have more negotiations, so forth. We've seen the current market, not to jump ahead too far, vacillating between 2 to 4.
Probably
maybe
2 to
touched
4,
4-ish at the
half,
peak at the slow season, and then right now we're between like 2 and 3.
Yeah.
And so I wanted to make sure. So again, if you're following this, the pace of market in 2008, it was about 17 months at its peak, right?
Wow. Yeah.
And so that's where when folks say like, "Oh my gosh, prices are spiking, Flagstaff, we gotta wait till the bubble bursts." It's like there's demand though right now. We're not seeing everyone give up. If you're not gonna buy it, someone will.
And they did.
Yeah, and they did. Right. And so that's the thing is like knowing, yes, absolutely. We saw the metrics that supported the bubble, and there was this a little minor bubble here versus other places. But yeah, so then we head in from 2000 to 2008, then onward to 2010, 2019. And so when we say pressure builds beneath the surface, it's basically saying like we started to see university growth, investor demand, influx of second home buyers. So that's a lot of that Arizona population growth and second home buyers. Not a lot of construction keeping up. And that's what's pretty crazy is if you look at, there's been a lot of building. But what have you been seeing build? Condos, apartments.
Condos. I mean,
we've added thousands and thousands of units of student housing. And that's all helpful, right? It's all helpful, but it's not single family homes.
It's not single family homes.
It's not starter homes. There's not massive communities of starter homes going in right now. And so really underbuilt during that expansion. Well, we did see population grow. Don't quote me on this, but I think it's somewhere up close to almost like a 10% population growth from the early 2000s to where we are now. And then when we see the acceleration event, so we know that work from home, like you were saying, the lifestyle, you and I worked with many, many clients that were saying, I to work from a computer, or I am now in a remote status. I'm going to go do it in a place I can afford more, because coming from West Coast to here.
Yes, it was a lot more affordable from California to Flagstaff.
Yep. And they live by the mountains, and they don't have to deal with the I-5.
Oh yeah.
Right. And so
all they had to do is pay for premium internet, and they were set.
Yep. Exactly. And so, and obviously the other aspects that went along with the influx of cash, and it was a very, very unique period of time, right? When we saw this influx of cash in the markets, we saw, historically low interest rates because of massive rate subsidies. So we saw a ton of buying and a ton of demand in here. And then, just a massive demand spike, which led to a large price point spike.
Yeah.
Right. We've since then, so this reset without release, and and that was, we have to remember though, that was a negative time. I think this is important. Like we were talking about, is you can't just be like, man, I wish I had 3% interest rate. You have to remember, like, 3% interest rate and offering like $100,000 over ask was also not super comfortable.
No.
Not being able to
Waiving
get any repairs done, waiving inspections, waiving appraisal.
Appraisals.
These are some scary times. That's like great that you got this cool interest rate. Like not downplaying that, but there was some really big downsides to that. I hated that market. I think we told the story.
That was not a normal market. That was
of like 29 offers that went in on a house on a weekend. We helped 7 buyers get pre-qualification letters for those.
I'm pretty sure we had an offer on that same house.
And saw 0 of my buyers come back. It was went cash over ask and a disgusting over ask. And it's like, then that's 28 people that lost out. Right. Yeah. And there was a lot of negatives about that market. So when we then jump into 2022 through 2024, reset without release. So yes, we did see rates, rates have been very in this inflation market, which we've seen inflation a lot, or the inflation markets like this in the 70s and 90s. So it's nothing really new. It's just we haven't experienced in a while. Yeah. And it looks really bad when you compare it to like 70-year lows on interest rates. So when you go from like 2% to 7 to 8%, not great. Right. So we've seen this big whipsaw as we've been in this kind of inflationary market that we're still working our way out of. And when a lot of folks have these amazing interest rates, they've been able to be pretty stubborn. Yep. They don't have to sell. So they maybe have an unrealistic price still. Yep. But they can kind of keep making the payments.
Yep. They're like, they keep making the payments, and until they get the price that they want, they're not in a hurry.
Yeah. So that's where it's kind of this reset of, yes, we're shifting, but there's not a big release in the sense of prices are fairly holding. Like you look at Flagstaff now this is what people have to be careful of. They're like, oh my gosh, well, I saw that price reduce, so prices must be coming down. Well, if that person started well above market because they thought the prices were going like here, and then price reduced to appropriate, that doesn't mean that prices went down. Yeah. It means that they slowed the car down to the market.
Yes. They brought it down to where it probably should have been in the first place.
So then in 2025 to current, we are seeing, and we are entering that tail end of that inflation market where we are seeing, again, this could last for some time still, but we are seeing rates are coming down, right? Mm-hmm. Inflation's calming, not quite where we want it, but we have seen interest rates come down significantly. We are seeing activity pick up slowly but surely.
Yeah. Seeing some properties come on the market.
Yeah, seeing a little bit more inventory. So we are seeing a little bit more inventory. And so that's where it's kind of saying, okay, where is it going from here? And that's where, if we jump into, again, I always love the stats here to be able to say, again, absorption rate, we talked about that, or months of inventory, right? That's where we are currently sitting. And this is only through like the March of this year. So I'm a little dated on some of the stats here, but that's where we're sitting at, that is 2008. Sorry. Yep. So you can see in 2008, we were jumping upwards of 10. And again, I think at certain moments, the time before that, it went even higher. Whereas currently we're sitting like at 3.4. Yeah. Right. So again, totally different numbers. Again, as you're looking at the months on the left part of that, is the shift out. And we see that seasonal shift of like a little slower in the wintertime anyways. But that's where definitely right now the market sentiment, right, is. Yeah, do you want to talk us through that a little bit? What we're seeing buyer and seller sentiment right now?
Yeah, so for buyers, they are a little bit more payment sensitive, so they get to be a little bit more picky. They get to do more negotiations. They don't have to hurry. They're not having to go rush that offer in an hour from seeing the home and they're not having to waive their appraisals or inspections. So they get a little bit more negotiation power right now. So that's definitely what's happening on the buyer side. For our sellers, I mean, we haven't quite gotten them all there yet. Yeah. Some might still, list a little bit high, but when those ones tend to chase the price down. But we are seeing some sellers actually starting to understand that, if they can price it accordingly the right way, it is going to go very quickly. It always depends on location, especially, price point. There's different price points for this, but I think sellers are starting to finally understand that they need to be smart about pricing right the first time. Otherwise, they are going to chase those reductions.
Definitely.
Yeah.
So the market's slowly but surely kind of finding each other.
It's starting to even out. It's going at a more even pace now.
Definitely.
Yeah.
So, and as we wrap through, I don't want to bore everyone as I jump into this next slide of basically you can pause here if you really care to see but we're going to jump into rates and market because that's been playing very heavily into what we're seeing, right? There's a very, very sensitive buyer to monthly payment, which rightly so, right? When we come from the 3% market into then the current prices of now, and as we've had this big inflation where you're paying extra for everything, right? And so when you're being hit on groceries, your insurance, your, all these different expenses, then it's got to play into the housing of what can you now afford and how does that impact? How's the rate then impact your affordability with close, 70 to 80% of folks financing a home? Just as a quick, you can pause on this as you care to, but basically coming from, as the small local banks and like number one there of lending out their money to where this secondary market was created to say, hey, we need more money to lend in Little Flagstaff. So let's go ahead and create where the banks in Flagstaff can offload or sell their mortgages so that we can get more money to keep lending. And then that's where we created then a standardization of those mortgages, which is where Fannie and Freddie came in. They created a standard of those mortgages of what, so people knew what type of mortgages they were buying. And then now it's this, fairly complex mortgage security world to where, when I jump in and every single client that sits in my office, I will show you this, whether you love markets or charts or not. I will show you this. But basically, as we look at mortgage-backed securities, this is a live traded market where every day interest rates are changing. Now, it is an opposite or inverse relationship for everyone to note there that the higher the value of this bond, the better the interest rates. So that's where you can see all the way on the left there of like on this perfectly straight line of government subsidized mortgages of 2 and 3%. Been a whipsaw since then, and we're heading the right direction as far as the recovery. And that's again on that bigger kind of inflation cycle that as we head higher and higher in bond values, we should see interest rates reduce and work towards a more of a normal. But that's where, and then kind of zooming in on the current that again, you can see these things changing daily. But as we jump into a comparison again, as of spring 2026 versus what we've seen in the last year, we're just off of best levels right now, right? The current Middle East conflict is still kind of going on here to where that's still causing, some oil and inflation concerns. But you can see that we are far better recovered, and we saw some things spike last summer, and we're 1% below that.
Yeah.
You look at and this is just based off ballpark $600,000, 20% down. So again, pause on the slide if you care to further digest, and that's just a really rough ballpark estimate on our principal, interest, tax, insurance payment. But you can see that is a savings of almost $300 a month difference from last summer, right? So if you want to see, if you want a little yellow price tag of it's on sale, this is your little yellow price tag of it's on sale. And price point wise, you might not, you're going to see some negotiations still in that right now, which is kind of a nice thing in this market. But and interest rates hopefully can come down further, but that's where we can always refinance.
Yes.
Right. If you can find the right deal on the house, and that's kind of maybe then a summary of this current market of opportunity of finding the house, I believe is the hardest part. Mm-hmm. If you can find the right deal on the house and you're qualified on the mortgage and it fits, just know we can always redo that.
Yes. You could always reduce it down.
And so, jumping into kind of then our takeaway is then, right, we're in an area of stabilization. We're seeing a little bit of inventory growth, some negotiations. Markets can be very different based on price tier, location, and right. But then where are we going? I would call it the shift, right? We should see hopefully more inventory. We should see more activity as things calm down, as lower rates come into the market. Mm-hmm. But I don't know. What do you think is going to happen as we see low rates?
Then you're going to have probably less negotiations.
Yeah. And that's a sliding scale, right? All of a sudden you're just not going to get, they might play closing costs, but they're not going to fix the water heater. And then at some point in time, they're not paying closing costs either. And then at some point in time, they're not doing anything for you. And then maybe they're going up on the price.
And now that's extra money that you now have to budget for.
So those are maybe this, and not to scare anybody, but is that a year from now? Is that 6 months from now? Is that, 3 years from now? The shift is going to happen slowly, hopefully, I think, and at some point in time. But that hopefully gives folks an idea on how the markets go. And I think the idea being you can't cherry pick, and go back and say, well, I'll take the 3% interest rate, but high negotiations and no one else is looking at the home. Unfortunately, a lot of these things shift together.
Yes.
And so knowing that we have some, we know kind of what's going on right now, and we know the opportunities now. And it looks like, sure, you could get that lower interest rate next year, but you might lose some of these other things. Yeah. Perfect. Well, awesome. Well, I hope this has been educational for everyone as we talk about markets. Again, some of these basic principles hold true. And if you are talking to us in a year from now, connect, give us a call and say, well, what's happening now? And based on your, number one is always buying when the economy is right for you.
Yeah.
And then you can look at the broader economy and say, okay, what should I do and how do I navigate?
Yes.
Do you have any other thoughts on understanding markets?
Just not to be scared to ask, because you don't know what you don't know. So, that's what we're here for. We're here to help you understand better. So we're always willing to take your call.
Awesome. All right. Thanks, Amanda. Enjoy, everybody.
Thank you.